Understanding inheritance tax versus estate tax. Inheritance tax and estate tax are both taxes levied on the transfer of assets from a deceased person to their heirs or beneficiaries, but they operate differently and are imposed at different points in the transfer process. 1. Estate tax. Imposition. Estate tax is levied on the total value of a deceased person's estate at the time of their death. The estate includes all assets owned by the deceased, such as real estate, investments, bank accounts, retirement accounts, business interests, and personal belongings. Tax thresholds. Estate tax thresholds vary by jurisdiction, with only estates above a certain value being subject to the tax. Below this threshold, estates may be exempt from estate tax or subject to a lower tax rate. Tax rates. Estate tax rates are typically progressive, meaning the tax rate increases as the value of the estate increases. Higher value estates are subject to higher tax rates. Exemptions and deductions. Many jurisdictions offer exemptions, deductions, or credits to reduce the taxable value of an estate. These may include exemptions for small estates, deductions for certain expenses or debts, and credits for charitable donations or bequests. Filing and payment. The executor of the deceased person's estate is generally responsible for filing an estate tax return and paying any estate taxes owed. The return must report the total value of the estate and calculate the applicable tax based on the tax rates and deductions allowed by law. Timing. Estate tax is assessed at the time of the deceased person's death before the assets are distributed to heirs or beneficiaries. Though inheritance tax. Imposition. Inheritance tax is levied on the transfer of assets to individual heirs or beneficiaries. Unlike estate tax, which taxes the entire estate, inheritance tax focuses on the individual inheritances received by each beneficiary. Tax thresholds. Inheritance tax thresholds vary by jurisdiction, with only inheritances above a certain value being subject to the tax. Below this threshold, inheritances may be exempt from inheritance tax or subject to a lower tax rate. Tax rates. Inheritance tax rates may be flat or progressive, depending on the jurisdiction. Some jurisdictions also offer exemptions or reduced rates for certain types of inheritances, such as those received by spouses or charitable organizations. Exemptions and deductions. Similar to estate tax, inheritance tax may offer exemptions, deductions, or credits to reduce the taxable value of inheritances. These may vary depending on the relationship between the deceased and the beneficiary, the type of assets inherited, and other factors. Filing and payment. Inheritance tax is typically paid by the individual beneficiaries who receive the inheritance. The executor of the estate may be responsible for filing an inheritance tax return and providing information about the inheritances received by each beneficiary. Timing. Inheritance tax is assessed when assets are transferred to heirs or beneficiaries after the estate tax, if applicable, has been paid.